Good afternoon. In October, we saw a relatively strong performance from global equities, building on the strong results that we've seen through most of 2021. We're going to talk about three topics today. Firstly, corporate earnings. Secondly, central banks. And lastly, COP26 and the fight against climate change. It's relevant that we've seen strong equity performance, even though some of the macro data has been a little bit weaker than expected. Issues around inflation, supply chain, a revival of COVID have dampened some of the economic growth indicators that we've been looking at. Nonetheless, corporate profitability has been pretty good. Over the last month or so, we've seen a series of earnings releases coming from a lot of big US listed companies, and overall the results have been positive. In general, US corporates, so far at least, have been able to weather some of the supply chain issues, manage some of the inflation pressures, and produce strong results and relatively high profitability. The question going forward, of course, is whether this will continue to persist or whether the third quarter was really a peak in terms of corporate results. We've kept our equity exposure largely unchanged, suggesting that we continue to think that companies will do relatively well and that this will be reflected in robust earnings growth. Turning now to central banks. Central banks remain a key focus for financial markets, particularly now as they're beginning to think about ways to remove some of the extraordinary stimulus that they've provided over the last year during the pandemic. In Europe, the ECB has moved a little bit more decisively than some analysts expected in terms of bringing the PEPP program to an end. In the US, the Federal Reserve looks set to begin to reduce some of its stimulus, while in the UK, the situation is a little bit less clear. Markets expected the Bank of England to hike rates at the most recent meeting, following from hawkish comments, particularly from the governor, but in the final decision, the Bank of England and the Monetary Policy Council have left rates unchanged. This caused some short-term volatility in markets, but we continue to think that the direction of travel is clear towards a gradual removal of stimulus and perhaps a hiking of interest rates over the next few months, even if the precise timing is a little bit less clear. All of these central banks have been trying to deal with the same fundamental issue, which is that inflation, running higher than expected and higher than central banks usually want, has proved a little bit less transitory than they expected. And how they manage that process and how effectively they manage it will be crucial for the global recovery going forward. Finally, let's turn to climate change and COP26 in Glasgow. So far, we've seen a number of promising commitments around things like reducing methane emissions and addressing deforestation. The key questions are, first, will these commitments be enough? And secondly, will they actually be implemented? From a financial markets perspective, we think that the focus is really going to be on implementation. What will governments actually do? What regulations and policies will they actually implement? And then financial markets, we think, will start to evaluate how effective they'll truly be. On a related note, we're running a webinar on November 24th that's going to explain in a bit more detail how we think about ESG investing. We'd be delighted if you'd join us. Thank you very much.